Hi and welcome to the Market Alert for Tuesday, the 23rd of March 2021. So bonds and big tech bid, banks and Bitcoin break as dollar dumps. Biggest daily gain for tech over financial since early November as yields slide. Well, they did for a while during yesterday. Powell slams Bitcoin, says crypto more a substitute for gold than the US dollar. Obviously, the central bankers are getting slightly worried about the attention that these cryptocurrencies are actually getting at the moment, and of course decentralized, and any lack of control is much of a worry and a fear for these megalomaniacs. Talking of which, and criminals, ECB finally ramps up bond purchases after pledging to fight rising yields. Well, that's a killer. That is this woman here, the criminal, Lagarde, is wanting to control the yield curve. It's the worst thing they could do. It is the worst thing that or the worst day's work they will ever do if they start doing this, because it will actually go on to confirm that there's an inflation problem. As it says here, the ECB revealed today that net purchases settled last week through to March 17th jumped by 21 billion, up from 14 billion the week prior, and the most since the start of December. Amazing. I mean, this woman who's a convicted criminal is running the ECB. The only difference is hers is official, the rest aren't. But they're all criminals in principle. Implied volatility. Well, some interesting news here, because we've got a new low taking out the 1603, 1583. The lower this goes, the bigger the correction will be as you look across to the left of the chart for last year, before we had the arrival of the virus and the market dropping. We're getting into this situation where the implied is making new lows. I didn't think we'd actually breach the 16, but we have. The lower it goes, the bigger the correction will be, and we'll have a look at the underlying market in just a moment. And then we're green in the implied there as well, which again is indicating that there is a correction coming. Meanwhile, the yield is 166.9. Yesterday was 1.697. So they're certainly trying to hold things. If we just have a quick look at a 5-day graph, you can see that Thursday we had the spike up to 174, well actually 175.5, which you can see there. And then on Friday we had a quick run up there just after lunch before the US markets opened. And yesterday we didn't really get back to the highs. I think we got to 170. Yeah, there we go, we got 170. Oh, sorry, 1.7. Yeah. So again, are they starting to control this? It seems interesting that all of a sudden from Thursday we're not going back to those highs. But again, if they do, it'll be the worst day's work that they do, because it will create and confirm that there is an inflationary problem. News today. Well, as I said yesterday, it's all about the central bankers this week, and Powell is testifying once more at 2 p.m. I think it's the Humphrey Hawking testimony, isn't it? He does 2 consecutive days, 6 months apart. And Bailey is also speaking as well today as well. And that is at 11:50. Overnight markets, the Dow, again, managing with the assistance, no doubt, of the plunge protection team yesterday, moving back up to the 5-bar moving average, but failing to hold this overnight as prices are looking as if they're starting to move to the downside once more, and that ties in with the implied volatility as well. So at the moment the Dow looking fairly weakish, as is the DAX, no doubt, and it certainly is. So again, you can see here that prices are once again back below the 38% retracement from this low to this high. And also 50, watch the 62 where the market found support before in this area, and also ties in with yesterday's low as well. So a close below this will see prices move to the downside. In order to move back to the upside, what we could do is some decent news to start with, and the first thing it needs to do is to stay above the high of yesterday, which the markets had a look at overnight but failed to hold at the moment. So overnight, let's have a quick look. Prices sitting at yesterday's high but failing to hold. You can see how the 200 MA became a resistance for the prices overnight, trading down to the DP level, as we can see here, then staying below this and moving down to the 14,600 level and the S1. The low is going to be crucial, and also getting back above the DP and the 200 MA as well is going to be some resistance. See what the futures market does at 7 a.m. when it opens, and then above this we've got the high and the close as well. But at the moment price is attempting to make some sort of a comeback off the 50% retracement in the daily chart there. Okay, now there was not a lot to report for yesterday because the market was fairly sideways. In the futures market, you can see that prices didn't really react either, and it sort of set a precedent for the day. And again, it's the central bankers are really are the problem here, and we see the market open and move down, finding support at the S1. Then prices immediately brought back with some selling pressure here, but after staying above the 200 MA, prices then move back to the upside. But then the market just became sideways, as you can see there, and it's waiting for Powell, and we're probably going to see the same thing today as well. And even on the short side here, when we had a signal, immediately the market saw buying pressure right on the entry price there. I stuck with it for a moment or two, and then decided to jump ship as we saw them coming back in here. Just took a couple of points loss there, because there's no point in sitting and waiting for the market to continue to the upside, and in this case sitting sideways, eventually moving slightly to the upside, but really quiet. And the same for the afternoon session there. I've got the yield up just to have a look, see what it was doing, but listening to Powell, the market barely moved. I mean, we're up there 25 points. It looks like it's a big move, but it's barely nothing. And then back to the DP, and that's how the afternoon session played out. It was just very tedious and sideways, as you can see there. So it's a bit of a tough week really, because the markets are waiting for news of what Powell will say with regards to the yields, whether they're going to control them or not, and any other news, and including obviously Lagarde and also Bailey as well. So a bit of a tough one. Okay, that will do it for this one. If there is anything else to report, I will let you know. But as ever, thanks for watching. See you in the next.